You have people who make less than $70,000. Their monthly payment is $4,000 a month. You add that $4,000 a month on a $300,000 house or a $350,000 house. When you add in all the extra fees and taxes and mortgage insurance, how long is that person going to be able to sustain that? 45% of their income is going towards making their monthly payment. Like, they're going to be squeezed. We're going to see even greater declines. Here's the scenario. It's a couple, work remote, a family that live here. All right, this is the common thing. Family that live here. They're going to be buying property cash. They're going to be spending around $800,000 on a house. Now they're going to be buying it cash. But his concern is, do I sell my house in the other state? Do I sell it? And in their market, it's very strong. There's a lot other things driving the economy rather than what's driving our economy here. $800,000 cash. What they're nervous about is buying something and then in a year it being worth $720,000, or in 2 years it being worth $620,000. So year one, year two. So essentially, first year they lose $80,000, which is a 10% drop. They're concerned about that. And year two, they're gonna lose $100,000. When you put it all together, it's $180,000.
Where they come up with those numbers of the loss, how are they equating that? So I'd like to see the calculations on why they're losing so much money year one, year two.
That's their fear.
That's their fear.
Their fear. So, but if you think about it, this is only a 10% loss, which is not out of the question. I mean, we've seen from 2021 to now, like, all of that equity is almost wiped out. So 180,000, we're talking about 20. It's going to be 20 and some change. So this is, they're losing 20%.
So it sounds like to me they should be purchasing a home on their fear-based chart there at 620 instead of 800. They should be finding what they want in that price point. If they fear that they're going to lose that much, because it's such an unknown, especially with with the elections coming up, the economy, everything changing, everything can change drastically. That 800 right there could turn into 1.2 as well. It could swing a wild, direction. Especially they're paying cash. They're not worried about, mortgage rates right now and paying interest on it. But I think it's always a risk of moving into the area and not knowing. Nobody knows what's going to happen in 2 years.
Yeah, but what do you? So this was the question that was posed. Mm-hmm. Now and I'm going to give you a little bit more background. This person, they work remote, but they also work for a financial advising company. Mm-hmm. And this financial advising company, all the advisors are betting on a bear market. Like, they're betting that the market's going to crash. Mm-hmm. And so he has this thinking. His thought is, if I buy something, he just doesn't want to see there to be like 20% in a couple of years. Be like, oh my gosh, if I would have just waited 2 years, I could have saved 20%. So then his question to me, which I'm asking you, is, what is the market going to do? What do you think? What do you feel like the market's going to do in the next 6 months to 2 years?
I think it's all dependent on the election.
Yeah.
That's what it comes down to, is the amount of policy changes that are being made. My first thing would be, though, is if take politics out of it anyways, even though that's going to change everything coming up, is I would first look at an area that we know that's going to appreciate. Mm-hmm. So if you're looking at houses, 800,000, that's a substantial house. A couple years ago, that would be massively substantial, but that's becoming more average than not here in the Valley. But I would look at an area that's being built upon, an area that's expanding, an area that has amenities, areas that is close to things. All you can really do is pre-plan and make sure that area you're buying in is going to be, the value is going to be there, and it's going to continue to try and build value. Because there's houses that are going negative, but there's also houses in the valley that are going positive. It's all really area dependent, and it depends on what dirt you're on. Dirt is more valuable at sometimes more than the house, depending on where you're at. Are we talking acreage? Are we talking wooded? Are we talking high desert?
We're just talking about 800,000 here in the Treasure Valley.
Yeah, I think that'll be the first thing, is when come to the area, they look, and obviously you help them point out what areas are going to be growing and what area. We don't have a crystal ball, we can't tell, but obviously we know there's some areas that have substantial growth and that have value and that people are always going to be flocking to, and areas that people want to be around.
Yeah,
and this is my approach of taking policies and politics out of it, and monetary policies, which we know that's going to change drastically. If we have a continuation of the policies we have now for the next 4 years, and say, Biden does get reelected, I think things are just going to substantially be worse. And they're probably correct on an even worse crash or correction that we've already experienced.
Yeah.
But if policies are flipped and money becomes cheap again and money becomes free and, it's flowing like crazy, debt's being created, and rates are being dropped, people are going to go crazy. It comes down to the 10-year plan. I mean, what is the plan there? It's hard. I mean, if everybody has a ball saying, I buy this house and it's not going to go down value, of course everybody's going to buy that house. But if you see in 2 years it's going to drop by 20, but what if it drops by 20 but goes up by 50 in the next 5 years?
Right.
I mean, it's back and forth. My thing is just dirt's valuable, so make sure you know where you're buying.
Right. Well, it can be valuable.
Yeah.
And
What I mean is the area of the dirt, where you're located, wherever your house is located at. I mean, it's very important to the valuation of the house.
I look at the indicators on what is the market doing, right? And so I think the interest rates losses that we've seen, I think we've seen a majority of those losses based off of what the FOMC is doing, right? Well, based off of the short-term lending policy interest rate, like we've seen the effects of that. The next thing I look at what is the inflow and outflow of people moving here. So our numbers, as far as the inflow and outflow, we're all the way back to 2016 numbers. As far as the percentages goes, we're only seeing around 52% of inflow and 48% of outflow. So we are like, the migration hasn't stopped, but it's slowed down significantly. If there was a time where we were seeing 60% inflow and 40% outflow of people coming to the market in the last couple of years, but that has really shifted. And so that's the next thing we look at. Okay, if the migration has slowed down, and so we looked at, okay, we've seen the effects of the interest rates being increased because nobody can really afford what we're doing. Then we look at that, but then we also look at what are the current buyers who are buying, and who, like, what is their monthly payment? And so I just think of a couple scenarios where you have people who make less than $70,000. They don't have any other residual income other than what they're working, and their monthly payment is $4,000 a month. Right. So now you add that $4,000 a month on a $300,000 house or a $350,000 house. When you add in all the extra fees and taxes and mortgage insurance, how long is that person going to be able to sustain that? And that's something that's really, like, you really got to consider. It's like, okay, that $300,000 house and your monthly payment is almost $4,000 a month, but your income, more than 54, I think it's like 45% of their income is going towards making their monthly payment. Like, they're going to be squeezed. And if some economic thing happens, then it's like we're going to see even greater declines. And then it leads me to, okay, what kind of cycle are we in? Right now we're getting ready for an election. And that does change people's mindset. Depending on what people feel like who's gonna go into office, depends on how they react to how they spend money. Right. I mean, I've been an agent, you've been an agent through multiple presidential cycles, and it seems like every time election happens, you either got the people that are like, the market's gonna completely tank, I'm selling everything, I'm gonna go hoard. Then you have the opposite of like, okay, like Trump's gonna get reelected, and we're just going to keep spending. And so it completely shifts depending on where the people feel like the economy, like who they feel like is going to win. Well, and so then that's another factor that has to be considered when we're talking about what's going on here in the next year.
Well, also a major factor too. So going back to what I was talking about, location. 2 homes here, same price point, 2 different areas. So say you got a flag lot at, say, $750,000. You have a 4-bedroom, 2-bath, 2,500 square foot home on a flag lot, 0 lot, stuffed in a neighborhood, 0 custom built, no custom, nothing's custom there. Everything looks the same. But then you have a house at $800,000 that's on 3 acres, a 3-2. You have a well, you have a septic, you can put a garden in, you have acreage you can do whatever you want on. I mean, you have value market, and then you have what people are willing to pay for market. And it's completely different things. So if they're purchasing a home at $800,000, but they have acreage and they have amenities and people can do things, you can build a shop, you can build a house, an ADU, and you just go. Or you're buying a home that's stuck in a subdivision. There's nothing, you have to ask for permission to put up a flagpole. You have some serious issues there. So I think, especially at that price point, you really got to consider everything you're talking about. What I'm talking about, taking out politics, is what can you actually do with that property? Yeah. I think because a lot of people come here that some people don't care about what Zillow or what the MLS says or what their agent says about what the values. They don't care. Yeah. If they see this property and you got 2 acres on there, a shop, and you got a well, and you have a creek, and you can have animals out there, that I'll pay $1 million. Yeah.
Yeah.
You know what I mean? It's so widely sprung. So I just say do their due diligence and talk with you and figure out what they really want. Because I think either way they're in a good situation. I mean that's really admirable to have that kind of that cash saved up and have that ready to go. That's a lot of power for somebody. That's something that's really great.
Yeah.
Something to look up to for a lot of people.
But I think when you have that kind of money, or I mean, I even find myself doing this. Like, let's say I have $20,000 or $50,000 sitting in the bank. It's like, okay, I want to invest this so I'm not losing money. How do I invest it and that kind of stuff? So,
well, everybody's always gonna have that fear based, and I mean, anybody who's sensible and saves more than $50 is gonna have a sense of I'm gonna lose it.
Yeah.
There's always gonna be that fear based, and the problem I think a lot of people, a lot of people have analysis paralysis. They don't do anything.
Right.
And I think we're all guilty of that. Is we just don't do anything because we're fearful. We're just like, we'll wait until the election.
Yeah.
We'll wait until next year. We'll wait until rates improve. And all of a sudden 5 years goes by and it's like, maybe I should have done something 5 years ago. But nobody knows the situation. Yeah. All I'm saying is, my experience of real estate and my experience of purchasing, buying, selling properties, my situation is different than anybody else's, but I'd much rather have a property that I can do something with. Mm-hmm. And I'd much rather, you can buy a custom home in a flag lot that is, like I said, stuffed in a neighborhood that you have to ask permission to mow your lawn. Yeah. Some of these, they're ridiculous. Or you can have that same thing, a little out of town, right outside, right over here in Cloverdale and Amity, and just have properties that you can do whatever you want on. And that, to me, that is so valuable.
Yeah, and I think that's where then it goes to lifestyle, right?
Yeah.
Because we do have clients and we have friends that they want to turn, like, they can lock the key and jump on a plane and fly.
Right. Well, that's what I'm saying. My situation. I don't mean their situation. Some people like.
Yeah, everybody's situation is so different, and that's why these scenarios are great. If you want us to look at your scenario, shoot us an email. Let us know because we're happy to discuss it. Yeah. We don't have it's not always the right answer, but maybe through a conversation, you'll get some answers, or you'll think of things that maybe you wouldn't have if you didn't have that conversation.